So basically, this is a weekly commentary trying to give us direction of the week, right? So I'm going to show you how I look at the market and what we are anticipating for market to do this week, right? I always make it a point to tell all my students or anybody I tutor, I am mentor, that you don't always you anticipate what the market is doing, but before you execute your trade, you must react off what the market. So you don't execute based on what you are anticipating, but you execute based on what the market or price action is showing you that it wants to do. So the weekly commentary is basically for us to kind of like anticipate what we're going into the week, then wait to react so that we can execute our trades, right? So we'll start off with looking at the US dollar index, which is the DXY. So basically, I like to focus, stay on the weekly and the daily time frame, right? Because I'm a day trader. So even if you are a swing trader, I don't see a need for you going to the monthly time frame, because the monthly time frame basically is for those position or short-term traders, people that hold trades for months, all right, that trade in volumes. Most of the time, they don't even go down. When they look at the monthly, they go to the daily to execute their trades. They don't go below the daily time frame. So I always like to stick on the weekly. If you're a swing trader, you're a day trader, you're a scalper, best to just start from the weekly, right? So from the weekly, we want to see the direction. We want to see what the market is telling. We want to see what price action is telling us to the left-hand side and to the right-hand side, right? The right-hand side, we want to see at immediate price action. And looking at immediate price action, we see that DXY is taking out lows. It's taking out lows concurrently, right? It's what we call continuous break of market structure or market structure shift, right? It's taking out lows to the downside. But if we look to the left side, we saw that prior to now, the XY took out this high, which was like a break of market structure to say we are bullish, right? So there are two scenarios from last week. If you watch the market commentary of last week, you saw that I said that we're either running into the discount of this range, right? This range here, we're running into the discount of this range, right? To continue bullish, which you see market came down to the discount and it gave rejections. You see the rejections it gave, right? So if you zoom into this on the weekly time frame, you see that the last week's candle didn't close below this. So that gives us a pointer or a hint that most likely we want to reverse and continue bullish on the dollar. Want to continue bullish on the dollar. This is the indication, because we also, the way I look at the market, I also want to look at the structure of the market, and I also want to look at the candle closures, because the candle, they tell you the story, right? ICT will say the candle body tells you the story, the wicks they do the damage, right? So wicks mainly is to run liquidity. You see the liquidity of this zone was run. That was the liquidity we ran to this zone, right? This is like external liquidity. So most likely we are looking for price to go into internal down to this other block or this fair value gap and continue downwards. This likely situation, or price also from here, price just shoots and begins to take out the high, the buy side liquidity on the high side, right? So looking at the weekly, we see that from our candle closure, we see that we are bearish, right? On the internal structure here, we are bearish. The candle closure also we are bearish, but the previous candle didn't close below this one to tell us that we're going to continue. So most likely we're going to either get a retracement or we're going to get a reversal, right? So we'll go to the daily. We want to see what the daily is telling us, right? Based on what we saw in the weekly, we see that this level here that was taken out, this was like external liquidity. So the same thing applies. You see, price created a liquidity void here by giving us multiple fair value gaps, which we call liquidity void or sell side imbalance, buy side inefficiency, which is called CB for short, right? So most likely price is going to want to close this imbalance to continue to the downside, or whatever the scenario, price will continue to the upside, right? So also, if we look at what the candle closures are telling us, you see they had an aggressive move to the downside, like giving us a continuous break of market structure to the downside, being bearish. See multiple three candles. This is displacement, creating inefficient displacement. But by the time we took out this liquidity, we saw that the momentum of the candles began to weaken, right? But however, we see that these buy candles here, did not close above the candle, the bearish candle that took out liquidity, right? So this is also an indication that most likely we want to, the price is not yet done. Price still want to continue downwards, right? Price still want to continue downward into discount. So we are looking at this. So most likely we want to anticipate what the previous day's candle wants to tell us. So looking at from DXY, we see that there are two possible scenarios. Either we get a push here from here to the upside, right? Either to take out the liquidities to the upside here, to take out all this liquidity to the upside here, or just to fill in this liquidity void or CB to continue downwards. But from also there's a scenario that price could push downward also, seeing that price, the previous bullish candles didn't close above this last bearish candles that was responsible for taking out liquidity down here. So most likely this is also a possible scenario, but we want to wait for price, like we want to wait for price to show us structure. Want to go to the lower time frame, maybe 4 hours or 1 hour to see structure. Structure will guide us on which direction to trade on the DXY. We know that DXY is inversely proportional or is inversely correlated to GU and EU. So if DXY is going down, GU and EU will be going up. If DXY is going up, GU and EU will be going down. So as a scalper and day trader that I am, what I'll be looking for, if I was trading Monday, I don't trade Monday. If I was trading Monday, I want to look at the range of this previous daily candle on DXY to see what price does here, right? Right now, we opened, the market is opening in the discount zone, right? To see if price is going to continue. So you go down to your lower time frame, the 1 hour, most likely to see the structure price aligning, right? You see on the 1 hour too, it took out multiple short-term lows, right? So most likely you see that this also validates why the bullish candle on the daily is not closing below that one. So most likely this is what will likely happen, because this is a break of market structure, retrace into this is either this other block here in premium and continue downwards to clear out this liquidity here. So this will be our first point of call, our sell side liquidity on the XY if price is going to continue bearish. But you also want to wait for confirmation by your structure, right? This is, I'm not really teaching you strategy. Everything is available on our channel, the God of Indices channel. So you can look at this playlist and see how I will look at this on a day if I wanted to trade. So haven't done this, we'll jump straight into GU to see if our analysis on DXY also aligns with what GU is going to be doing. So the same thing applies. We're going to go firstly to the weekly time frame. See what what price is telling us to the left-hand side and to the right-hand side. So first of all, look at the right-hand side. So the right-hand side is more important. That's what price is doing currently, right? So we see that to the left-hand side, previously price broke structure by taking out multiple short-term levels, right? It's one short-term level, that's two. This was the first short-term level taken out. One, took out here, we took out the third one, took out the fourth short-term level, right? So this tells us that we have changed, this is a market structure shift bearish. However, so most likely this is a retracement. Yeah, this is two possible scenarios. This is a retracement to this level to continue downward, which will validate our DXY pushing to the upside, right? So this likely we're going to see this, but looking at also see this also supports what we just saw in DXY. You see that the previous weekly candle, bullish candle, didn't close above this other one, this impulsive candle here, right? Which gave us a weak rejection. So most likely want to see a retracement, also a retracement to this fair value gap or this order block, right? But if you're a day trader and you're a scalper, you don't really want to concern yourself with this. You just want to go to the daily. We can go to the daily and also now see what the daily is telling us. What the daily is telling us. You see, the same liquidity void created on the XY is created on GU, right? This is the buy side inefficiency, sell side imbalance, which is called BC, right? BC or BC, whichever one you call it. So most likely we want to see price run this if the bullish movement is going to continue. So we want to see a retracement continue the bullish movement upward. But firstly, we want to predict our bias for the daily candle. What's going to be the expansion for the daily candle tomorrow? If looking at this, we see that looking at GU, we see that we had previous two bearish candles, right? The candle body closed below the previous candle, but it didn't close below the wick, right? So this is where you always want to stay in the sideline. If I was trading GU, I would not want to touch Monday, except you want to scalp. You want to go to the lower time frame and scalp, because this right now is not telling us any direction, right? It's not telling us whether price wants to continue from this order block here and push to the upside, right? This is not, this also is scenario price wants to continue here. The order block here serves as support to push it to take out this multiple buy side liquidity, go down to this liquidity void here, right? So that's a possible scenario. However, I'll not be inclined to that scenario. However, because this most likely we have this inefficiency down here. So most likely price will want to run it down. And this is just inducement to induce people to think we are going to continue buying, then take all of them out as liquidity. Most likely that's what price did last week. So I'll be favoring this movement for price to come into this range, coming into this week, right? Now you see that's my support. If I want to trade, I'll be looking for Monday. I'll be looking for sales, because I'm looking for price to go down into this range. If we just jump into, because G is not clear, maybe EU will tell us something clearer, right? We jump into EU. You see EU is a lot clearer. You look at EU, you see that the daily candle closures close with the body below the wick. Can you see? It closed below this one, right? This one closed, and you see the candlesticks. Let me zoom it here so you can see what I'm talking about. Can you see this? This previous candle closed below the wick of this one, telling us they are bearish. And can you see the last Friday's candle didn't close above here? If it closed above here, then I'll be more inclined to say, okay, we want to continue to upside. But see, there's a weak rejection and it still closed beneath here, right? Still closed beneath here, right? Telling us that first liquidity was grabbed, right? Previous day's high was grabbed, but however, we have not gone down for previous day's low. Previous day's low, which is sell-side liquidity, still open, right? So even if we are going to go up, this is my first draw on liquidity. So I'm looking for price to reach to this zone first, right? This first point of liquidity, this is the first zone I'm looking for price to come into, this sell side liquidity here, right? So I'm looking for, well, I'll most likely be predicting that Monday's trading candle will be an expansion to the downside, right? Take out this low created here and the previous one down there. So this is what I'll be looking for GU to support the bullish movement of the DX5, of the dollar index. So most likely, and you know how I like to trade. I want to mark the daily range and see where we are in the daily range and see what structure will be telling us in daily range. Now, if you do this for EU, if you go to a lower time frame, maybe 4 hours, you want to see what structure is telling you on the 4 hours, right? I want to see what structure is telling us on the 4 hours, right? You see, this is not really a break of market structure. Go to the 3 hours, we see the same thing, 1 hour. Okay, 1 hour you will get, right? So this is the reason why you want to watch, right? If you see on the 1 hour, we're bearish, but this move here was a break of market structure to the upside, right? So you want to wait to see what price. This was a break of market structure. So most likely, if we're looking at it from the 1 hour, based on what the internal structure is telling us on the 1 hour, we're looking for price to come. Maybe this is just a retracement to the discount to continue upward, right? So do we understand? Do we have any questions? You can unmute your mics if you have any questions. Guys, is it understood?
Yes, sir. It's all understood.
Okay, so but including GU price action is very dicey. You see, GU didn't show a clear movement. However, EU is showing on the 1 hour that from last week it broke structure to the upside. So you either want to get a retracement to discount, then you buy, right? But first of all, if you are the type that always would like to, if you want to trade EU, you always want to pay attention to what DXY is doing, right? Because EU follows DXY bumper to bumper, right? It follows, it respects DXY. If you accept you don't want to look at DXY, then I'll advise you to look at G because most times GU just moves on its own. It can just you can analyze GU independently and still trade it without looking at DXY. But if you want to trade EU, I'll advise you to always look at DXY, right? So this movement will be based on what DXY will also present for you to be able to go into this. So this is our weekly commentary. Are we good?
Yes, thank you.
Okay, so thank you so much. Let's have a wonderful night. Rest. Stay blessed.
Thank you.
Good night.